Welcome into the bunker. Today, I want to talk to you guys about gold and why this could possibly be the best time to invest in gold and the bullish case for gold here. As you can see, we are selling off hard in equities, in crypto, in consumer staples, Target and Walmart, safe havens getting hit. We see inflation is high and we see a broad sell off in the market. But one thing that is not selling off is gold. And so I want to get into why it is important to hold gold as a diversifier, but also as a wealth creator in the environment that we're going into in 2022 and beyond. So this is just a chart of the gold versus equities, where we have stocks down 15% on the year. This was only a couple of days ago, so that's definitely changed. But gold is up by 0.5%. So obviously, it hasn't really done much. It has had a huge rally and then a sell-off. But overall, it's been a good hedge against inflation because basically everything is selling off in this environment. And so, that's basically one reason to hold gold for sure. Another reason to hold gold, gold basically it has a counter relationship with stocks. It's about negative 40%, regressing to the mean. But financial events, usually you see everything selling off, like 2008, like 2020, possibly like 2022. And so, it is possible. And, gold remains a tremendous hedge in these crisis scenarios. And so here are some of the reasons why you want to own gold. Real rates are negative. Okay. So holding bonds long term is dicey in this situation because if inflation continues at 8% and bonds are yielding 3%, that's a negative 5% carry on that bond. And so more people more often, especially institutions, would want to hold gold in this environment, in especially stagflation, which with some of these consumer staple stocks getting sold off, that is something that we could possibly see here. So I also wanted to look at China and the geopolitical risk that is possibly upcoming. So China says no one and no force could stop it from taking Taiwan as 13 jets breached Taiwan airspace. This is just the first of many sort of lead ups. This happened in March. But I just wanted to sort of back up my data that the geopolitical risk is there. And Russia, obviously is getting sanctioned. They don't like the fact that, a few countries surrounding them are now trying to join NATO. And so they are, prone to use even more force potentially if, Finland, for example, wanted to join NATO, they would not, have something, they would have something to say about that. So this is massive. It's not really being priced in at the moment at all. I actually think that there's zero geopolitical risk priced in at this moment. Even the Russia-Ukraine situation is basically left for gone and dead at this point. So I think that a lot of investors have sort of taken that and they've ingested it. And now they don't think that it's going to affect us at all. And they're basically punch drunk here from all the years of positive returns on assets that they'll essentially find any excuse possible to pump the market. And the markets are manipulated, obviously, at this point, even to keep them up at these levels and also to keep gold down. But we will talk about that later as well. So I also wanted to say that there's many evidences out there. I don't think I have to prove this one, but food and oil shortages and also inflation. So not necessarily shortages, but actually there is some talk of shortages in diesel that is coming into play here. So there on the Northeast corridor, there is talk of diesel shortages among gas stations like Love's, who have reported to truck drivers and clients that there will be diesel shortages at select locations. and as you can see, gas is the highest it's ever been today. So it's, I know it's 448 near me. That's probably one of the cheapest in the country. So I'm thankful for that. But we also have central banks who have been net buyers of gold. And so, we have China and Russia who have been buying gold for many years now. And usually you would stack gold before you went into a war, which is what Russia did. And if China is stacking gold, that may be another sign that they are planning for war as well. So we have many things that are coming into play here. It's a very interesting market. I think that the real estate market is flying. It's like kind of the last thing to go here. And so I'm wondering if that is sort of also taking a little bit of a dip, but we are having sort of a growth scare today, and we can see gold sort of outperforming. And so we also see that gold is only 0.5% of total global assets, which is 1 quadrillion, and gold is 7 trillion. So I guess that would make it like 0.7%. And this is physical gold, not derivatives or anything, which is a lot of it is, derivatives. And so if you think about all of these assets that are sort of based on debt and based on derivatives and based on paper currency, fiat money, which is just the dollars that they print into the air digitally out of nothing. Physical gold is money, and it's been money for thousands of years. And so the entire system is sort of, oddly enough, held up by this physical gold bullion, because in a sort of end of the debt cycle scenario, people, will run to physical gold at some point, especially if inflation continues, which we know that it will. We know that it will be sticky. We don't know necessarily that it will be as high, because used car prices are crashing. We do have certain parts of the economy that are going to slow because of growth. But the fact that only probably 50% of some of the crops have gotten into the ground in the United States, that we're already seeing food crises around the world. And so, we're seeing riots around the world. We're seeing digital rationing cards already being rolled out in Iran. So, we see Sri Lanka, what's happening there. Tons of riots, food riots already in Spain, in South American countries. So obviously the US is always going to be sort of last in this scenario, but I do believe that a lot of the reason that you haven't seen total shortages yet on the shelves is probably because they are pulling from, the deep storage vaults that they have at these warehouses. I have heard numbers such as 40% higher than usual in terms of them pulling extra supply out from those warehouses to get into the store shelves. The next thing I wanted to talk about is the potential for a commodity super cycle. So we do see this chart, which is basically the this is probably from like 2016 or something, but and so we've started to come up in this, but this is basically just saying that commodities are very cheap. And I apologize for that, but you can see on this chart here, basically that commodities are very underweighted towards equities. And so gold usually is part of that commodity cycle. The thing is that you've seen commodities run pretty hot. I do think that they're due for a sort of sell-off. I think that gold will sort of go sideways because it's already been sold off. And so, yeah, I think that gold is sort of, it's in this point, and we can look at the chart obviously as well. But, I think that gold is sort of at this point where, to me, it looks very interesting here. It's even up on the day, which they can't hold it down for long. It's pretty funny that they are not able to hold it down below 1800. So basically, yeah, if we're in a commodity super cycle, gold will run last. So that could be like 2024, 2025, 2020, anything up to 2030, I do believe we will see a massive run for gold at some point. As you can see, we held up pretty perfectly on this long-term trend line here, where I took one of these highs from, I believe this is 1980 or 2008 top there. And then I took that basically through this first crash here, and then it kind of perfectly matched up with this and also this top as well. So I thought that was a pretty good trend line to highlight. We also sort of see this trend line coming into play here, where, basically we have pretty strong support. So there's a ton of trend lines on gold that sort of make me think that this is a really good place to, to get into. So, there's more reasons to buy gold. It's undervalued, like I said, relative to stocks. Physical wealth is something that I think people will start to look to in this world that we live in now. I do think that, potentially, this is something that we could see play out. And this is kind of my scenario here that I wanted to show, is that we could go to $6,000 gold here, potentially. From what I'm seeing on the charts, we do have a lot of different indicators that would tell us basically, if you look at it on a log chart, you can kind of see that we haven't really had a blow off top here. This is more of like a cup and handle. And so, there's sort of this trend line that I took from this top to this top here, which I think is really important. And I think that comes in at around 2,800. So I would probably be a seller if we got up to those levels. And then I would expect a correction where people think it's over. And then, sort of a sideways action. We get back above 2,000. We break that all-time high, and then we just run to 6,500 as like the last blow off top, where everyone says it's going to go to 10,000 or whatever they will say at that time. This is the scenario that I think will play out, and it's hard because I know that gold is completely manipulated. So it actually is so manipulated that I actually think it's a good thing, because once that manipulation breaks and once people realize that it is being manipulated and that there is no physical available, and that the digital gold that they hold isn't there in the vaults, there is potential for a run to gold. And that's the next thing I wanted to talk about. Gold is money. Everything else is credit, as JP Morgan has said in the past. And the thing is that when gold is all gone and all the physical is soaked up by these people who sort of figure it out, once everything is breaking and we still have inflation, there's just probably no stopping it at that point. So once we sort of break the shorts and the bullion banks, and banks start to go under, that's when that gold is like very, very likely to run hard. And so there is a possibility that we just run straight up. And that's why I put this line here as sort of like, okay, if we did run straight up, we could get to 4,000, or this, I guess, 3,800, and sort of hit this top trend line. And then that would be it from there. Or we'd sell off, get support at 2,000 and then go something like that. So this isn't like, obviously, anyone can predict what this might end up looking like. But one thing that I, again, wanted to highlight too is that silver, to me, is super undervalued as well. And this is sort of the scenario I see playing out for silver if gold were to go to those levels. I think $200 silver is in the cards. This is if banks fail. Silver is basically the Achilles heel of the financial system, of the banks. They are all very short silver, 100 to 1, paper derivatives. And so, this is sort of associated with gold. I think you can look at a 10x for silver as you look at like a 4x for gold. Even if gold does like a 2x from here, I think silver could do a 10x. So gold is just a little bit safer in a recessionary environment where we have sort of depression-like standards in terms of industry, because silver is a big industrial metal. So but the thing is that there will be a run to gold miners. Okay. So when people run to physical metal and it's not there, then they will run to miners, and miners are just like sitting here waiting to soak up the this liquidity that could come into the market. I mean, you look at Newmont. This is the main asset that I would own if I was sort of looking for like my first gold miner to invest in. And obviously many of the funds that you see in retirement accounts, gold miners will have like a 10 to 15% allocation to Newmont, because it's kind of like it's in the S&P 500. So it's kind of like the main institutional gold miner that a lot of institutions will hold as a proxy for gold. One of the funds I like is First Eagle Gold Fund. It actually has 20% gold bullion. So you can find that in your IRA. It has 20% gold bullion, and then it has Newmont, Agnico Eagle, Wheaton Precious Metals, some of the ones that I really like, and it also has silver. It has silver bullion, and it has actually like a little bit of a silver miner allocation as well, but mostly gold miners. So yeah, this thing looks ready to rip to me. I mean, we broke the highs. We're now testing support of the old highs. And I don't know. I wouldn't be surprised to see us just rip if depending if gold rips. So these are the levels. It kind of all matches up with gold. I mean, that's kind of where these trend lines come into play, and everything sort of lines up when you start to look at some of these trend lines. It's really cool to sort of look at some of these. Even like Gold Fields, I really for some reason was attracted to the way that this stock looked. It sort of formed this wedge. We broke out, and now we're having this perfect retest on the 0.236 number. This is also sort of like a somewhat of a junior miner, but it's a junior producer. So it is an older one. It's like, I think it's a $7 billion market cap, but these are the type of runs that you could see to some of these miners if we do have a run to gold, and people start to speculate in the miners. It's such a small market that you could really see some 5-baggers, some 10-baggers, and that's where you sort of start to get into some of the smaller like junior miners, like explorers and things like that. I like the way that New Gold looks as well. Like, I think that is sort of one that is like in this like massive sort of downtrend. But if we can break that, we could run really hard. And it's a small sort of like meme type of like $1.29 stock that people might run to. Another one at BlackRock Silver. I'm not the one that, none of this is financial advice, obviously, as always. I'm not someone that like knows things. I listen to people in terms of like research, in terms of people that, and I can tell like who does the work. And I've done the hours myself to sort of research who has done the work. And I know that a lot of people have recommended BlackRock Silver. So that's one that I like. That's a really small miner. If you can find that. Some of the other big miners that I like, Agnico Eagle. I do think that, again, like these lines just sort of continue to start to match up, and these things go back all the way to the 70s. So this trend line really puts it in for me. We have a ton of touch points here all along the way. We formed a wedge, we broke it, and now we're sort of retesting. We're a little bit lower than that, but we're sort of testing the downward part of this, and then we could rip. I do think that there's a potential here. If we look at the wedge here, if we break, you see how it matches up perfectly. Like, it's like this geometry that you can find in all stocks, basically ends up giving you these sort of perfect symmetries. And that's why I drew this line from here to here and then down to here and use this as support. And this also matches up, right? So they all sort of match up. It's like a triple match for basically a 6-7x gain in Agnico Eagle in this run. So We can also look at wheat and precious, which again is one that doesn't go back as far, but it does go back to 2005. It is a royalty miner, and the difference between royalties and producers are the royalties, they basically lock in a price on gold ahead of time, and they pay those miners, and they take possession of the gold, then they sell it. So they don't have the costs of inflation, like oil and things like that it takes to mine the gold. And so that's the one issue with miners, is that there isn't the inflation that is, putting their prices higher for basically their costs. But usually gold will keep up with that inflation historically, and so it'll actually outperform that inflation cost. And so Wheaton is kind of sitting right on the outside of this long-term wedge. And once again, we can see if this matches up. This is sort of like this long-term trend line here, and if it obviously goes higher, but it sort of matches up with the Fibonacci. So again, I don't know if necessarily this one, has had a long enough history for us to do the same amount of work that we've done on some of these other ones. If we look at GDX though, we see some upper levels, and this is just the ETF. So again, this is like similar to a chart that you would see on a gold fund that might be in your retirement, like Fidelity Select Gold, Gabelli Gold Fund. So things like that are sort of similar to GDX. And, we have targets of upwards of, 130, which would be a nice like 4x gain from here. So that's pretty good for an ETF, I think, obviously. So we can check in real quick, since this is obviously, a crypto channel as well. But Bitcoin, I've said it before, I do think we're coming down to this level. We can look at it on the weekly so that we can kind of catch, this level here is right basically at 22K. If we don't hold 29K as support here on the daily, I do think we will sell off pretty hard into the this 200 SMA. And I actually, to be honest, looking at it on the weekly and the monthly, there's really no support until potentially 14K, because you look at sort of the monthly close on those top candles back then, and then you look at that. I mean, that's kind of a perfect match for me as well. So I would not be surprised at all to sort of crash to this level, pop around, and then maybe double, crash again into 14K. And so, and that sort of would match, like, I think, let me look if this matches the sort of long-term trend line. See that? So if we're looking at that long-term trend line, that matches up pretty perfectly with a massive sell-off, obviously. So we had the biggest sell-off here, and we're connecting that to the biggest sell-off here. And that's where we get potentially the biggest sell-off here into 14K. Maybe not right away, because we do actually have the monthly 100 SMA as well on around 22K. So that should be support short-term for sure. And we could rally off that, and then we could kind of dump. I'm not sure how it will work out. But there is a lot of support down here at 14K. So I wouldn't expect us to go lower than that. I would expect that to be bought up. That's like where Sailor started buying, was around that level. So that should be interesting for sure. In that scenario, there's a few trend lines for Ethereum. I do think if Bitcoin goes to 21K, we'll see this 1400 area tested for sure. If we lose that, or if we bounce and chop around, then go down again, I actually think that there's really not much support until around 750, 760 here. We look on the weekly, we have, this $1,100 area as well, but there's not really too much support here. As you can see, this is sort of that nice resistance that we caught on the complacency leg, was around 760, even a little bit higher, maybe 860. But if we look at the weekly closes, it's more around 760 or so. So that's an interesting area as well, and a major bear market to look at. But yeah, I just wanted to cover those real quick. And yeah, this is not looking good for the S&P. So we're looking at the close here. We're looking at 4 minutes until the close, and we're looking at a massive sell-off here in the S&P, and we're closing potentially lower than we've ever closed. Let's see, since March 25th of last year. So it's interesting for sure to see. People were saying it has to close above 3930 because that was the close from the previous low. But honestly, this thing looks like, again, it wants to go to 3500. So I think that's where we're going to catch some major support. As I've said before, this is kind of where the support is over here. This is where basically the Fed printed money, and we that's kind of where we went up to after they printed money. So now that they're taking the money away that they printed, I expect us to go back to that level. I think psychologically that makes sense. I think just logically it makes sense. And I don't know if it'll happen right away. Obviously these things take time, but I think eventually we'll get to that level, and maybe we'll even get to these levels down here where we have some support as well, around that 3300 level, 3400, something like that. Obviously we have a ton of support down here at like the 3000 level. God forbid that happened at this point. That would be really bad, but yeah, so hopefully you guys got something out of the video. Again, none of this is financial advice. It is interesting to see gold today in the green, kind of putting in some buys here. It looks like people, we have some nice candles forming on this little rounded bottom that I'm seeing here. And so, that's cool. That's cool to see for sure. I would even like to, I know that there's like a ton of stuff here, but if we could just measure this real quick and sort of see if this is the bottom, where we could go from here for the next target. So I think the next target would be like 2200. If we can hold here and start to rally up and go above the all-time highs, that's kind of what we're looking at. And again, there's that sort of region that we talked about with the 2600 to 2900 or so coming into play at like sort of a short-term top. If we can really rally hard up into that, that would be cool. But gold is a long-term asset. So again, I've said it before, but it's a non-sovereign currency as well. It's something that isn't associated with any central bank. There's no counterparty risk. Gold is gold. Physical gold, it is what it is. It's decentralized. So if there's a bank bail-in, if there's cyber attack and you have physical gold in your possession, no one can take that from you, without force. And so it's similar to crypto in that way, that it's like non-sovereign currency, and it's like decentralized because of that as well, because it's in your possession. So those are sort of all the reasons that I like gold here. And again, I will continue to advocate for it, although I will not advise people to do it. They can do what they want. And so again, hopefully you guys got something out of the video. If you did, please like, subscribe, and have a great day.